Ever wondered what types of assets exist in finance? Well, wonder no more as today we dive into the fascinating world of financial assets. Financial assets represent a claim on future cash flows or income of a business. They come in various forms and categories, each with its own set of characteristics and benefits. So, brace yourself as we navigate through this intricate finance maze. First off, we have cash and cash equivalents. The simplest and most liquid form of financial assets, these include currency notes, coins, checks, and short-term securities like treasury bills. They are easily convertible into cash and hence offer high liquidity. However, they also give low returns compared to other types of assets. Next up, we have equity. Equity, or stocks, represents ownership in a company. If you own a company's stock, you own a piece of the company. You can profit from equity in two ways: dividends, which are a share of the company's profits, and capital gains, which arise when the stock's price increases. But remember, with higher potential returns come higher risks. Then we have debt. Debt assets are loans that are expected to be paid back with interest. Examples include bonds and debentures. The bond issuer owes the holders a debt and is obligated to pay them interest or to repay the principal at a later date. Debt assets are less risky than equity but also provide lower returns. Another type of asset is real estate. This includes land, buildings, and anything permanently attached to it. Real estate can generate income through rent or can appreciate in value over time, providing a higher return on investment. However, it is less liquid than cash, equity, or debt. We also have commodities. These are basic goods used in commerce that are interchangeable with other goods of the same type. Examples include oil, gold, and agricultural products. Commodities can be a hedge against inflation but are also subject to price volatility. Lastly, we have derivatives. These are complex financial instruments that derive their value from an underlying asset. Examples include futures, options, and swaps. Derivatives can be used for hedging risks or for speculative purposes. In summary, financial assets range from simple and liquid assets like cash to more complex and risky assets like derivatives. Each type of asset has its own set of characteristics and benefits, and understanding these can help you make better investment decisions. Cash and cash equivalents offer high liquidity but low returns. Equity offers ownership in a company and potential for high returns but comes with higher risk. Debt assets are less risky than equity and provide regular income in the form of interest. Real estate can provide high returns through rent or appreciation but is less liquid. Commodities can be a hedge against inflation but are subject to price volatility. And finally, derivatives are complex financial instruments that can be used for hedging or speculation. So there you have it, a quick tour through the varied landscape of financial assets. Whether you're an investor looking to diversify your portfolio or just a curious mind, knowing about these different types of assets can give you a better understanding of the financial world. So the next time you come across these terms, you'll know exactly what they mean.